Saraswati Saree Depot is trading around 75 to 80, close to its 52-week low. And whenever a fundamentally stable business reaches this zone, it triggers one big question for investors. Is this the last chance to buy before the stock re-rates? Let's break it down clearly. SSDL is not a new age fashion brand. It is a decades-old ethnic wear business with deep roots in India's textile ecosystem. The company operates in the B2B wholesale segment, supplying saris, dress materials, lehengas, kurtis, and ethnic collections to a wide network of retailers across the country. This means SSDL does not depend on flashy online marketing. Its strength lies in distribution, relationships, and sourcing power. Now look at the stock performance. SSDL, listed with strong expectations, moved up to around 128 and then corrected sharply to the 75-80 zone. That's a correction of more than 40% from the highs. But here's the important part. The business itself has not collapsed. What corrected is the sentiment, not necessarily the fundamentals. Technically, the stock is showing base formation near 74.80. This zone is acting like a strong demand area where buyers are consistently emerging. On the upside, the key resistance lies around 90 to 105. A clean breakout above 90 with volume could signal the start of a new upward trend. This is often how strong rallies begin, not from excitement, but from boring consolidation near bottoms. Now, let's talk fundamentals. SSDL operates in a sector with structural demand. India is a country of weddings, festivals, cultural functions, and traditional dressing. Ethnic wear demand does not disappear. It goes through cycles. And companies with strong sourcing networks and retailer relationships tend to survive cycles better than trend-based fashion brands. The company also benefits from a wide product portfolio, strong supplier network across weaving clusters, established relationships with thousands of retailers, a business model that is difficult to replicate quickly. But let's stay balanced. SSDL is still a small cap stock. It operates in a consumer discretionary segment, which means demand can slow down during weak economic cycles. It also carries typical retail risks, inventory management, working capital pressure, and fluctuating margins. That's why this is not a blind buy stock. This is a positioning stock. So why is this zone interesting now? Because the stock is trading close to its historical support, valuation comfort is emerging, and the business is showing signs of stabilization. At such stages, risk-reward often becomes asymmetric, limited downside but meaningful upside if sentiment shifts. And markets work on sentiment shifts. If earnings improve, if demand picks up during festive and wedding seasons, or if the company shows better operational efficiency, the market can quickly start re-rating the stock. Small caps don't move slowly during re-rating. They move fast. So how should investors approach SSDL from here? If you're a short-term trader, don't jump blindly. The safer approach is to wait for a breakout above 90 with volume. That confirmation could open targets towards 105 to 120. If you're a long-term investor, the zone between 74 and 88 can be treated as a gradual accumulation zone, not lump sum, but staggered buying with patience. Over a 1 to 3 year horizon, if the business executes well, the stock has potential to revisit 120 to 160 plus levels. But discipline is everything. Position sizing matters. Time horizon matters. Let's summarize clearly. SSDL is a fundamentally stable ethnic wear business currently trading in a deep value zone. The stock is forming a base near its bottom, which is often where long-term opportunities are created. Risk exists, as with any small cap, but the risk reward is turning favorable. Short term, wait for breakout confirmation. Long term, accumulate slowly if you believe in the business and the sector. This is not a momentum stock. This is a patience investor stock. And very often it's exactly these quiet stocks sitting near the bottom that deliver the loudest rallies later.